March marks a hard deadline for property owners in Turkey, the month when annual income tax declarations are due. For most landlords, the rule seems absolute. If you collect rent, the state takes a fixed percentage of that income. Consider a landlord earning 15,000 lira a month, totaling 180,000 lira over the course of the year. Under the standard filing method, that 180,000 lira column is hit with a tax burden of nearly 17,000 lira in income tax and stamp duties. Most investors accept this deduction as an inevitable cost of business, never realizing they are overpaying simply by choosing the default filing method. The Turkish tax code actually provides a specific legal framework for investors to protect their yields if they select the correct filing category. Thousands of landlords currently overpay the government because they aren't aware that a second, more aggressive deduction method exists. This is known as the actual expense method, or gerçek gider yöntemi. This method is available to anyone whose property was purchased within the last 5 years. Within this 5-year window, the law allows a massive deduction that can effectively turn a taxable rental income into a tax-free holiday. The mechanic is simple. The tax code allows residential owners to deduct 5% of the property's original purchase price from their yearly rental income. If you purchased a residence in 2025 for 5 million lira, that purchase price becomes your primary tax shield. We compare that against the 180,000 lira you collected in rent during that same year. We calculate 5% of that 5 million lira acquisition cost. This produces a legal expense deduction of 250,000 lira. Because 250,000 lira is significantly higher than your 180,000 lira income, the deduction completely swallows the earnings. Since the deductible expenses legally exceed the total rent collected, your taxable income drops to zero. You owe nothing to the state. The high cost of the initial investment acts as a mathematical lever, erasing the tax liability of the yield it produces. Be warned, this tax strategy is highly specific. Applying it incorrectly to your filings will instantly result in a rejected declaration. This deduction is strictly prohibited for commercial properties and workplaces. It is a residential incentive only. Utilizing this advantage requires precision, ensuring the math is applied only to qualifying residential assets. This isn't a one-time discount. This shield can be deployed every year for the first 5 years of ownership. Keeping 100% of your rental income for half a decade drastically accelerates your break-even point and boosts the overall return on your capital. With the March tax window currently open, the timing for this calculation is urgent. Check your official title deed today and confirm your exact purchase date. Run the 5% calculation on your original purchase price before filing a standard return. Real estate profitability depends on this level of active tax management, leveraging the actual expense code to ensure you retain every lira allowed by law.